Good morning, guys. Listen, welcome to the show. Today is Friday, April 27th, 2018, and I did my first take and I messed it up, and this is the second take. Anyway, thank you guys for tuning in, and we're going to get right to the markets. We're going to start the charts right here, and the first thing we're going to look at is the silver price today. Okay, so we're going to hone the charts in here and take a look at silver and see what it's doing. This is actually not as bad as you would think, even though it's $16.46, and I'll explain to you why. It's because of what the dollar's doing. The dollar's showing an awful lot of strength. It's moved up 2% on the U.S. dollar index, and because there's an inverse relationship between gold and silver and the dollar, strength, really a lot of strength in the dollar like this, showing little or no movement in the price of silver over the last 3 days. As you can see, silver's charting along, just maintaining a nice steady course. With the dollar as strong as what it is, that's good. That's showing strength for silver over the last 3 days. Now, let's take a look at cryptocurrency. Now, a couple things we're going to talk about here of cryptocurrencies. It's very important, and I want you to see. The first thing we're going to talk about is the what it's done recently. We've seen a movement upwards recently. If we take a look here at the 30-minute, we can see it moving upwards to 92.22 at the moment. But you have to take a look at the longer-term trends, and what I'm going to show you is, and I've seen Bitcoin do this before, ultimately, and see, I've been watching Bitcoin from the almost way back. I mean, way back when it was like $60. I've been watching what it's been doing and charting it. So if we take a look here at the 1-week chart, we're going to take a much closer picture of what it's really doing. Now, this chart is giving us a really long-term Bitcoin, what it's really going on with Bitcoin. This is giving us a real long-term picture. Now, what I want to focus in on here on this chart is this lead up a price to 19,666. We're going to be a little bit myopic with our charting on this, and down here, right here, at the bottom of this lead-in, it was only like $200. And this is this massive lead-in that everybody would have liked to have got in on, that you saw, all the way up to $20,000. And then you see this fall right here. Now, what we're going to look at is another lead-in. If we shift down here, go back in time to Bitcoin, we see a lead-in right here. And I don't know if we can get the chart down small enough, we can see this, take a better, closer, why don't that chart move there? If we can get the chart down here so we can see this lead in and drop off, it went all the way up to 1,100 and something bucks, over 1,100 bucks, and then it fell off. Well, we want to take a look at this fall right here, and then this bounce. Now let's open the chart back up and take a look at our version of the exact same pattern up here. So there's a massive lead in and a high price of $1,151. The same thing right here. A massive lead in and a high price of 19,666. And then we see this drop off. And we see the exact same drop off. And then we see a bounce. And we're seeing the exact same bounce right now. Now, if we look at the percentages of the bounce, we take roughly almost $1,200. Let's say $1,200 for argument's sake, and let's say $2,000 here, okay, for argument's sake. And we see a drop in price, and then we see a bounce. Now, how high did the bounce go? The bounce went to roughly $677 from $1,200. So it's a little bit more than half. So if we say this is the $20,000, we're going to see a bounce of a little bit more than half. Again, it's doing exactly the same thing. So this is roughly right here, 10,000 right now, and well, getting up close to 10,000, and we probably see a little bit more than half of 20,000. So I don't know, give or take. So we're getting up toward the top of this second little bounce, and you can see it has that same little green look to it as this one here, and so it's this very similar pattern. So we can see a drop off where it makes a final bottom. The final bottom here was $156, but most people didn't get in on it because it spiked down to that. But let's say the real final bottom where you could buy in was somewhere around 250 bucks. Right in along here, 250 bucks. It stayed down at that bottom for a while. So we're likely to see the same thing. We're likely to see it drop down to probably, I don't know, 5,000, 6,000 or lower, maybe even lower. It gives you a buying opportunity. It's going to do the same thing again. It's going to give you a buying opportunity to bounce in and get in there on it. But this is going to be the last one because this lead in is going to lead to yet another bigger, higher high coming up in the future. Okay, at the end of this, when I go over the rest of the markets, I'm going to come back and I'm going to talk about where this is going in the next 5 years. Okay, so let's move on. Let's move on to cryptocurrency market capitalizations. We see $420 billion. Bitcoin dominance is 37.6%. We see everything in the green today. We see some good bargains here on coins. Litecoin is a good bargain because it's only up a little bit over 3% at 151 bucks. Never forget that Litecoin is your number 2 coin. Number 2 to Bitcoin is silver to Bitcoin's gold originally. Even though it's in the number 6 position, it's always figured to be by the original creators as the number 2 coin. Bitcoin Cash is also another nice coin, but I'll tell you, I really prefer Litecoin. I think Litecoin is going to be huge. I'll tell you the truth, you know. So anyway, let's move on to the Dow Jones Industrial Average right now. She's down 11 points, 24,311. So you can see she's stair-stepping downwards. Each stair-step is that much lower. And I'm expecting the next stair step to take it down to 23,000, where I'm expecting it to bounce again off of 23,000. So we're waiting for that. Hasn't done it quite yet. The stock market, money has been sloshing around in the system. And today, the money has been sloshing around into the U.S. dollar and into the bond market. Okay, so let's take a look at oil first. We're going to take a look at the bond market coming right up. Oil's at 68 bucks, down 19 cents in the day on Sweet Lake crude. $68. And the overall trend lately has been upwards for oil. And will that trend continue? I don't think it's got much left in the rally at this point, really, in the short term. In the long term, oh, it's going to be way up huge in the long term. But in the short term, I don't think it's got much left in this rally. Unless war breaks out in the Middle East, then a different situation. Okay, so U.S. dollar index today. This is the big mover and shaker. She's up about 2 percentage points from what she was. The dollar, you know, was down around 98.7, something like that. And now it's 91.73. This is the big mover and shaker. But I told you there's 3 asset classes that they're going to go to. Gold, silver, and the dollar. Well, they're heading obviously into the dollar first. It's like a dinner. The kids are eating their pie first, you know. And so what can I say other than that? I mean, but eventually they're going to get to eating the fried chicken and the mashed potatoes and everything. But they're eating the pie first, and the pie is the U.S. dollar. But this is sweets and junk food. And this is not going to be good for them ultimately in the long run because the dollar's going to die. They should be going for their gold and silver at this point, but no, they're not. They're going for the dollar. They're going for the dollar ahead of everything else. They want to get in cash. They sense that something's coming, a lot of them, and dollar is moving upwards. They're also buying into bonds. We see the bond prices, bond yields are falling today across the board. The U.S. 10 years at 2.968. So actually, this is expected that the bond yields will fall a little bit, but they are going to start to go back up again later. As the Fed keeps pouring bonds and keeps doing their quantitative tightening, these bond yields are going to start moving up. So expect them to move up, but it's taking time. I mean, how markets move up is they move up in a wave pattern, and each crest on a market that's in a bear trend and each crest is lower or higher depending on which trend you're in. If you're in a bull or a bear, these are in a bear market, and so each time you're going to see it move, the yields are going to start rising again. We're just going to have to wait for that. So anyway, let's see, what all have we covered? Okay, we were going to talk about Bitcoin in the next 5 years out. Let's turn the charts off and let's just talk about that for a minute. The next 5 years out for cryptocurrency is we're going to see cryptocurrency take over the world, basically. So really all you'd have to do is hold them for the next 5 years, because this is not going to be pretty, folks. This is going to be a rapid transition driven and fueled by a worldwide hyperinflation of all of the fiat currencies. At a certain point, see, they've abused their privilege on the fiat currencies, the people who have control over the fiat currencies and over how much they create fiat currency. They've abused that privilege, and they've created too much fiat currency, and confidence is going to be lost. Where confidence is not lost, if you take a look at the track record of Bitcoin, like I just had it up there a minute ago, moving up from $2 all the way up to not $20,000 is deflationary, and that deflationary track record is not going to stop for these cryptocurrencies. It's going to continue these massive moves upwards as they gorge themselves on massive amounts of liquidity, and more people invest in them, and that investment, they see yields. That's the only place they're going to see yields, and they're always going to be chasing yield, and this is just going to slowly make a transition and take over from the fiat currencies. As the fiat currencies become less and less value, more and more people who are trying to sell things, they want obviously they want to sell what they have to sell. It wouldn't surprise me at all if the first companies to make the transition next to taking cryptocurrency would be the auto manufacturers. It wouldn't surprise me at all if they actually start to accept cryptocurrencies in lieu of payment for their automobiles. And that's because an automobile is a high ticket item. Real estate too will start making transitions over and start taking cryptocurrencies for payment, because the big money is going to be in cryptocurrencies, and the people who are selling high ticket items first are going to want in on that big money. They want to get their things sold. If you got a house sitting on the market and has been sitting there for 2 years and it's not moving, and you can move it quicker if you sell it for cryptocurrency, because the cryptocurrency people have got all kinds of money, because cryptocurrency just keeps going up and up and up. The first thing you know, all the houses will be for sale for cryptocurrency. Then the next thing you know, all the autos will be for sale for cryptocurrency. And then it'll trickle down to the less expensive items. In the end, Walmart will be taking crypto in the end. This is what the transference is going to happen slowly over the next 5 years. And about 5 years from now, this is when all your friends and neighbors who hate cryptocurrency say that they'd never use these cryptocurrencies. They're finally going to get a wallet that they know how to use. A wallet that's front end. See, a wallet has a front end and a back end. The front end of the wallet, where the people interact with the wallet, is just going to be as easy as pushing a button to use. They're going to create these new wallets for cryptocurrency. They're going to be much easier. You're not even going to have to drag and paste your addresses anymore or anything like that. It's just going to be a one click, and you've sent the money to whoever you want to send it to. It's going to be easy to use, and so that's when they're going to be buying in. They're going to be buying in about 5 years from now, when the price is exorbitantly high. Bitcoin might be $1 million a coin or something like that. They'll be buying in. And it'll make today's prices look really, really cheap. Because we're going to make this transition, and there's going to be an awful lot of problems with these transitions because everything is set up right now for fiat. And to make a transition over from our regular banking system over the cryptocurrency is not going to be an easy one. And it's going to look like Venezuela in a lot of places. But believe me, there's no stopping it now. This cryptocurrency, the horse is out of the barn. There's no putting it back in anymore. So we're going to have to be prepared for this transition that's going to happen. And what's going to fuel it to happen faster than it should happen is the fact that we are headed into a crazy situation with the fiat currencies that's going to fuel it. I mean, it would happen anyway. It probably would take 20 years if it wasn't for the fiat currencies going down in a blaze of glory in a hyperinflation. It would probably take 20 years to fuel this transition over into cryptocurrency, maybe 30 years. But being as a hyperinflation's coming, the hyperinflation's going to drive it that much faster. You know, and so anyway, thank you guys for listening. Like and subscribe, and we'll catch you in the next episode. Bye-bye.